Adam Hoeksema. Thanks for being on the Leadership Lounge. I wanted to have you on because, we know each other pretty well, and the beginning of my business journey included you because you did my SBA loan. But I think your journey is really interesting because you got to kind of see the ins and outs of hundreds and hundreds and hundreds of different businesses, and then also being a business owner yourself. So I appreciate you being on and would like to kind of start from the beginning with your entrepreneurship and business interest. Like when did that start for you?
Yeah. So I went to college at Taylor University, went there to study accounting. I think my dad had said if I was interested in business, but he's like, if you study accounting, you have like a marketable skill, right? Yeah. At the end of it. So you can always get a job. So that was kind of the idea. And then did a couple internships in tax and audit and realized I didn't really like being an accountant all that much. I couldn't really figure out why, but during the end of my audit internship, one of the audit partners said, or the firm partner said to me, like, I said I was interested in entrepreneurship, and they said, if you work hard here for like 20 years, 60, 70 hour weeks, traveling all the time, like you might be able to become a partner. And I thought, that is exactly what I do not want to do. That is not my idea of entrepreneurship. So it was pretty clear that the accounting world wasn't for me, and I wanted to be more entrepreneurial. So I ended up getting a job at a business incubator that tried to help startup companies and entrepreneurs, and got into small business lending through that opportunity. Did that right out of college, and so that was really my entrance into entrepreneurship world.
So, talk a little bit about, you're obviously doing it full time, but it didn't start out that way. Can you talk a little bit just to give the listeners some background into how you got started in entrepreneurship? And then I want to talk about Flagship and Bankable, but can you talk a little bit about Projection Hub and how you and your brother did that, and how'd you even come up with the idea and so on and so forth?
Yeah. So it does kind of relate to my work at Bankable. We were asking our clients, our loan applicants, to create financial projections. And we were looking for different templates and tools to try to help them, because they would always struggle to get us anything that made any sense. And so I was working on my personal taxes using TurboTax, and I kind of liked the way that it kind of walked me through this complex process step by step and made it easy for me. And so that was where the genesis of the idea for Projection Hub was, could we build a TurboTax-like solution for creating financial projections and walk you through step by step. So that was in 2012. My brother was a senior in high school, but was going to be studying computer science. And so I was like, hey, you want to practice by building me a tool and see if you like this? So he built the first version of the software, a software tool. And it, that's how we got started. I think we wanted, for a long period of time, we were trying to create a recurring revenue software business, because why wouldn't you want that recurring revenue? And I think after fighting that fight for, I don't know, maybe 8-9 years, it kind of finally became clear that projections for our particular type of business are a thing that you need at a point in time. Not something you really want to be paying for recurring. And also at the same time, we kept building more and more features into the software that was like, you could do this in Excel. So people would say, oh, I want to be able to do this in the software because I can do it in Excel. Well, eventually we realized we were just like rebuilding Excel. And Excel already existed and worked pretty well. And so it was, eventually we started creating Excel spreadsheet templates, and turned out customers like those better. And if I would have listened to my customers earlier, I probably would have, been far better off earlier on. But
Yeah, it's I was listening to a podcast once and they said every single like business software is just competing with Excel.
Yeah.
It's basically like, Excel has gotten so you can do almost anything with it now. And then with Google Sheets and then Google Forms and that integration, like, and then, now with AI and being able to write different code, it's just incredible what a person with very little experience can do just watching some videos. But I think uniquely what you bring to the table is what you were learning from Bankable, and through that process. So you start working at Bankable right out of college. How many people were there?
Yeah. So, I mean, it was, at the time, it was a business incubator, and it was, meaning we had a building and we had tenants, businesses in the building that we were trying to help get started and grow. And so it was the CEO, and then basically 2 other employees and myself.
Yeah.
A group of 4 of us.
So you weren't doing SBA loans at that period of time yet.
So they had just, when they hired me, they had just been approved to become an SBA microlender. They hadn't made their first loan yet. And so they said, hey, we're going to start doing this SBA lending. If this is something you want to kind of lead this, this little project here in what we're doing, go for it. And so that was kind of my start into it.
Can you, just because honestly, like I know some of the steps, but like kind of step by step in detail from Bankable's point of view, someone comes to you and says, I want a loan to open up this business. What steps happen from the application and what they need internally, how you decide if this is like a good loan or not? And then I think, can you talk about going to like the board approval and then going, I don't know, does you go to a bank? How does that all work?
Yeah. Yeah. So, somebody comes to us and says, hey, I want to start a business and need a loan for it. I think one of the first things we're going to do, we're going to ask them to fill out our application, but the application is going to have a good bit of personal financial information. Yeah. So we want to know about the business and your plan and whether that makes sense. But really at this stage, are you personally in a situation to be able to cover this if things go wrong? We don't like to put people in the situation where, everything has to go perfectly right, because it never does. It won't go perfectly right. So if we make you a loan and first day something goes wrong, we want to know that you've got some backup, personally. And so we're going to look at your personal financial situation, and try to determine whether there's all these, like the 4 C's of credit, I think it's called, but like collateral, your credit score, your character, and your cash flow. That's the 4 C's. So those, we're looking at those things. We would take maybe a different approach than a bank in the sense that a bank would have what is often called a credit box. And so it has these rigid lines. And if your credit score is just outside of that line, sorry, we're not a fit. Or collateral isn't the right value, sorry, it doesn't work. But for us, I would often describe it as we've got this kind of squiggly credit box line, and you might be outside of it over here, but then on this other aspect of your business, it's strong and it can compensate for that. So we try to be more flexible, as a non-bank lender.
And that's what the point of the SBA is like, if you're, I think when I applied for mine, I was maybe 20, 21. I don't even think I had a credit card at that point, probably, so it's like a traditional bank. I remember going into Chase Bank. They're like, there's no way we would give you a loan. And my banker was like, sorry about it. But he goes, you have to have he basically, like, for the amount of money we would loan you, you would have to have that like in a checking account here.
Right. Yeah.
But you just have to have the cash. Yeah. Basically, like, we'll give you a loan if you don't need it.
We'll lend you back your own money and charge your interest for it. Oh, thank you very much.
Yeah, that's exactly. That's basically essentially what it is.
Common. Yeah.
So, so let's say somebody, what percentage of people because I know tons of people who want to start a business and they got a great idea. What percentage of people do you think make it through that first wave?
So from like application to getting a loan. So I can tell you historically, so for Bankable's perspective, we have about a 33% approval rate.
Okay.
So, and we are more flexible, more open than a bank would typically be. So you're going to be even, it's going to be even tougher at a bank.
So you do the personal finance check, the 4 C's, and then what other documentation are you requesting after that point? And then how do you deem something as like, oh, this is a potentially good business? And then maybe what would you deem like, we don't believe in this business, I guess, essentially.
Yeah. Yeah. Well, I think, we're going to ask for a personal financial statement. We're going to ask for personal tax returns. We're going to ask for business tax returns if the business has been in business already. So these are all the kind of these required documents. We will, we may ask for a business plan and projections if, especially if what you're doing is kind of different or unique.
Yeah.
If you're starting a lawn care business, we may not need a business plan. We kind of understand how the business works. You got to go out and get accounts and you're going to mow the garden. It's like, but if you have something pretty unique, a unique concept, we want to see that you've really thought about it. So, I think those are from a required document standpoint, that's really it. And then we would kind of take that to our underwriting team, underwriters, the terminology, and the underwriter is going to be looking at, ratios and, debt service coverage ratios and cash flow and just trying to understand, how much wiggle room do you have to be able to repay this loan? And the SBA it's really a requirement on lenders that we don't make loans that don't cash flow.
Yeah.
So there are situations, and this happens fairly often, where someone says, I've got this great collateral. Put up this collateral, I want the loan. But if we look at the loan, we're like, but we don't think this is going to make money. We don't think you can actually cash flow the payment. We don't want to take your home or your vehicle or your equipment, whatever the collateral is. We don't want to take that. That's not the goal here. So it has to cash flow. Yeah.
You're not like venture capital. Like someone says, oh, I have this idea for a social network and my goal is to basically spend a ton of money and then hopefully sell it. It's like, okay, it's got to have some sort of income that's going to like cover the bills. Yeah, that makes sense. Yeah. So, a question I had was, can you remember the worst business idea you've had an application for?
Oh man,
we're not going to mention specific names or anything, but can you remember one? It's like, well, or maybe someone like that was fully just trying to take advantage.
Yeah, that's a good question. So there's one business that comes to mind often is this, and I think it relates to maybe a good general business concept, but somebody had a building. Yeah. They had a building in there and thought, okay, we're going to have a hair salon in this corner of the room. And then we're going to sell like hot dogs over here. And we're going to sell just a bunch of completely unrelated, we're going to sell hand-me-down clothing, like a Goodwill portion on this side of the business. It was just kind of like, you haven't identified a customer. Like who is your target customer and why would they come? It was just kind of like, we're going to do everything,
just sit down, come and get a pedicure, have a free hot dog.
I guess what I'm describing is Walmart in a sense. So it's like, I guess it's worked out for them, but this particular client was not Walmart. So I think,
I want to compete with Walmart specifically. I think it's like hard. I think it's becoming more and more of like a statement in business. Like the most boring businesses are typically the best ones to invest in. It's like, you say like lawn care, right? It's like, okay, like someone needs to mow someone's lawn, and it's more of like elbow grease, knocking on doors, and worst case scenario is like, hey, I need to buy a truck and a mower for $20,000. Hey, it depreciates $5,000. Okay, your real exposure is like $5,000, and But I think there's a lot of things, probably the business that I got into, like the cell phone repair world, there's a lot more risk when you have a lease and you have fixtures that are specific to a brand and maybe a newer market. How the underwriters, is there some sort of algorithm that's like written to be like, as long as it meets these relatively, like let's say there's 10 categories and as long as the median is 70%, or is there really a lot of interpretation on that side?
Yeah. So we would try to be data oriented to start with. So we developed our own loan scoring model that would, help us predict likelihood of repayment based on our historic portfolio's performance, based on things like your credit score and your collateral value and that sort of thing. So that'd be kind of that first screen. We'd say, okay, is it meeting like the numbers side of things? If it's doing that, then I think there is like this next phase of, does the business make sense? And does the operator, do we think that the owner is the right person for that? And I think a lot of times one of the things that we would see people get into trouble with is the numbers would work. Yeah. They'd look great. The business owner was not the right fit for the business. Yeah. Some common examples, I would say, you'd have someone that's in a corporate job, good income, decides they want to open a franchise sandwich shop. Yeah. They hadn't really considered what that meant. That well, now I'm in here making sandwiches when my team calls off or whatever. And like, this is really not that fun. This isn't really what I want to be doing. And those tended to fail, I think, because the business owner really didn't want to be in. They had the idea of like, if I had 10 of these, I'm not in actually doing any of the work. That sounds like a good plan. Yeah. But that you don't start with that usually. So
I think that's probably one of the biggest misconceptions of owning a business is so many people think that businesses can be passive income, a lot of them, and there's not. Yeah. So in the franchise that I was involved in, I had started my own brand and then converted. The best performing stores were ones that were owner operated, and the ones that were failing and all the people that complained were the ones that had the corporate job and were just doing it, trying to have like putting money into it and having it be passive. If you're not in there, especially when you're like 1 or 2 or 3 locations, if you're not in those businesses consistently, like they're not going to be run properly, and, I just see that time and time again, like, unless you're going to fork out like a couple $1 million to own a McDonald's or something, even then you still have to be pretty involved. So I think you're right of having a right fit. But if you have someone who's like a scrapper, be like, hey, like, I worked in a restaurant and I now, or I worked for a lawn mowing company and I ran it for the guy and now I want to do it myself. Yeah. It's like, okay, that makes a lot of sense.
And I understand what it's going to take. I've already experienced it versus I have maybe the wrong perception of what this entrepreneurship thing is going to be like.
Yeah. So then you get to the end. So it's like they pass all those milestones. And then you have like a board, right, that approves. And is in those board meetings, are there ever like kind of debates, or is it they trust the process and as long as everything sounds fine, it's approved? Or how does that look like?
Yeah. So the process is you're going to have basically a loan officer that is going to go in and pitch your case. So it's, if you think of Shark Tank, instead of you getting to pitch to the committee or to the board, it's a loan officer on your behalf. And so they're gonna, to some extent, it matters who your loan officer is. You could have someone that is like, doesn't really care if your loan gets approved or not. They're not going to do as good of a job. Yeah. Right? And so, the loan officer is going to pitch your deal to the committee. And now for us at Bankable, our loan committee was made up of bankers still. So it's like we're trying to make loans to businesses that are not able to get a loan at a bank. Yeah. But we have a committee that is made up of bankers primarily. And so there is still this, like, you almost have to untrain the bankers. These are not supposed to be as good as what you're used to seeing.
Yeah.
But if all we do is just approve what you would approve, then what's the point of us operating?
Yeah.
Why should Bankable exist? So we were kind of, always fighting that. So there's debate, and you would get, we would have situations where it's like, okay, having this loan committee member, we'd have like two committees.
Yeah.
We'd realize that like this committee member and this committee member are a bad mix.
Oh,
They're
really?
both in the same, like nothing gets approved because this person's always scared of this thing. This person's always scared of the other thing, and then we'll just never get anything approved. So, you have to.
How often does it make it to the board and it doesn't get approved out of like 10 or out of 100? I don't know.
Yeah. I mean, from Bankable's perspective, we don't want to spend a whole lot of time getting it all the way to that point to then have it be declined. So I would say, historically, if you're getting it to that point, it's gone through the loan officer, it's gone through kind of initial scoring, it's gone through underwriting. I would hope you're at like a 75 to 85%.
Okay. So it's pretty
success
high
rate of getting something approved. Now you could also have like, it goes to committee and committee throws in extra contingencies like,
Oh, okay.
Well, we'll approve it, but we want this extra piece of collateral, or we want to shorten the term or lengthen the term or lower the amount, or, so.
Yeah, that's really interesting. So one thing I wanted to touch on, because I think this is really what you did that allowed you to be, you said at one point you were the second largest micro SBA lender in the country at one point. And one thing that you did really early on is you invested a lot of time and effort into automation, into software. Can you talk a little bit about your reasoning behind that and what that allowed you to do that maybe allowed you to loan at a much lower expense rate overall and stuff like that?
Yeah. Yeah. Well, it was kind of I don't know what's the phrase, invention is, I don't know what it's called. Like necessity, like causes invention, right? Yeah. So I'm botching that phrase, but so for us, the idea, it was just me to start with and running this loan program. Yeah. And it got to the point where I was just keeping track of everything in a spreadsheet. Yeah. And it was like, once we had like 50 loans or something like that, I was like, this spreadsheet is not going to survive forever. And and the amount of time it took me to process things was so much. I could see that when we had 500 loans, like this just could not work. And so I looked at some different software, off the shelf software solutions at the time, and it was like $15,000 to get the software like set up. And I looked at my little loan program and I said, we've earned like $20,000 worth of interest income over the life of the program at this point. Like,
what year is this?
This is probably like 2011 or 12. Yeah. So early on, probably 2012. And so I was like, I can't afford it. I'm not going to be able to get our CEO on board to spend, all the income we've ever made on this software. So I contacted a developer that I knew from college and said, hey, could you just like build a real small little tool for me that could replace a spreadsheet?
Yeah.
And that was the first step. And then once we built that, we saw that was useful and helpful. And then we started building out kind of additional features around that. And it turned into this kind of big behemoth of custom software that we built that really set our program apart for a long time. That just made us a whole lot more efficient because we were just customizing the software around our specific process. And it allowed us also to just use a whole lot less staff to accomplish the same amount of work.
Well, for internal like KPIs, did you have like a cost per loan like number? Because I remember you mentioned years ago that like, oh yeah, the number one, but like you had talked about we're number two, but the number one company, their cost per loan is like 4x ours. Yeah. Can you talk a little bit about like how you calculated that? Yeah,
I mean, we would, because we're a nonprofit, and other nonprofits will publish their financial statements and like an annual report often. So you can see, you can take a look at those financial statements. And so we'd see that their expense structure, and like you could calculate what it cost. It was costing, 70 cents to loan $1 or something for these other organizations. So they were just having to raise so much money, so much grant money. And now, and at the time we were very scrappy. We were operating on college interns as our loan officers that were like stepping out of class to call, take a call with like a, prominent business owner or something, and that worked really well. I think as you grow, that bloat just happens naturally.
Yeah.
So, it's like those college interns became staff, and so now we couldn't keep paying them what we were paying them as interns. So we had to increase, and we wanted to keep those people because they were good, but also it inflates your structure. So I think we kind of got to a point where it was like, we couldn't get so much more efficient to keep our cost structure down as our labor costs and went up.
Yeah.
So,
I think that's another misconception is that like, as I grow, my product cost is going to go down. And there's cases where that's the case, but there's this middle place where actually like in the beginning, when you have to be scrappy, you are, and then you start making a little bit of money or you're exceeding some goals. So you like increase staff and pay. And then before you know it, it's like, oh, like what used to be, 35, 40% cost of goods sold, labor cost of goods sold is now like 60%. And then it's like, okay, now we need to automate and then to make those people that team, and then you can stretch it out again, and then you have to hire, and you go through periods of time where as you grow, your percentage of costs to what your product is actually increases.
Yeah.
I think that's something I realized probably 5 or 6 years ago. It's like, oh man, my labor cost of goods sold is 25% and my material cost of goods sold is 35%. And then I'm like, man, it's gonna be great when we grow because it's gonna go down. But then you overhire to grow and anticipation and all these things. And you're like, oh crap, my labor cost of goods sold is 45% and my material cost of goods sold now because of loss and other things is like 40%. You're like, oh shoot. So I think that's something you need to prepare for. And, is no different between a for-profit or non-for-profit, but there are those periods of time where you kind of have to get the cart before the horse to be prepared.
Yeah. I on that point, I think I experienced, I was kind of leading the bankable team, and I got to this point where it was like, I kind of managed the entire team of maybe we got up to like 10 people or something. And it was like, I can't, I'm spread too thin to do a good job of leading these 10 different people and keeping them on track and just being a good leader for them. And so it was clear that it was like, we needed to have some sort of management structure, some sort of layer, because if we ever wanted to grow, we needed that. So, that creates that extra cost though of another layer of management. And, it's kind of seems like you have to do that, I think, to an extent, at some point to be able to ever scale. But that is a hard shift to go from, just having kind of a flat group with one leader to then having a different leadership style and structure. And so I struggled with that.
When I'm talking with other like small businesses and they're like, oh man, I can't wait to have like 10, 15 employees. They have like 3. I'm like, you're in a sweet spot. Like when you have like 3 good employees where you're their direct manager, maybe have someone that is kind of more like a lead. That's a really good place. But then the really hard movement is when you're managing a manager. Like that's a really, really hard shift. And then it's a really hard shift. The next really hard shift, and I went through that a few years ago, is when you're managing managers of managers. It's like when you look at like the hierarchy. And that's where costs come in. That's where culture becomes way, way more important, because you're not the one. You're not the one directly driving culture.
Can't set
anymore.
it, yeah.
And that's like a really hard shift in business. And it's like, I think you have to. I would want to encourage a lot more business people, like to encourage, before you grow, really understand what that change is. Because if you can have a really good business that you can still go on vacation and you're not coming back to a train wreck, and you've got 3, 4, 5 employees, and the next step is to move up, hire a manager of managers, like really think about, you're not going to get that profit and that benefit back right away. Yeah. Like, it's like, hey, you got like a 4 or 5 year, like, hard road ahead to get to that point.
Don't blindly go into that decision, because it's a big decision. Yeah.
Yeah.
I think. And then another thing that I learned in trying to make that transition was that, just because you have somebody that is the expert and the skilled person in an area. So if we had somebody that is the expert in credit, it doesn't necessarily mean that they are going to be a good leader of people.
Yeah.
But that's really hard to then be like, you're the expert, but like, maybe there's someone else that is better at leading the group, and just trying to figure that out, within the culture of a team is really hard.
Yeah. So going back to more the technical side of the SBA, can you describe, and this is just my higher, like, not like in the weeds understanding. So basically the SBA writes a loan, and you guys have some sort of capital reserves to write that initial loan, to do that capital. And then what happens is a bank will buy that loan, but it is insured by the government for a certain percentage, correct? Is that how that works?
Yeah, there are different SBA loan products. The SBA microloan program, which is kind of what Bankable's primary loan product is in that situation, the SBA would actually lend to us, our organization, and we would relend that money out at a spread to the business owners, with no guarantee, no SBA guarantee or anything. So if the borrower doesn't pay us back, we're just out that money. Now, we got low interest rate money from the SBA. So, if we're smart about it, we should be able to make a living doing that. That's the microloan program. Mostly if you're hearing SBA loans, you're probably thinking more about the SBA 7A program, which is what a traditional bank would primarily be using. And we also participated in kind of a subset of that 7A program as well. So that's where you have the SBA guaranteed loans. In that case, like what a bank would do is they're going to take customer deposits. They're going to use deposits to lend out, and they're going to make $1 million SBA loan to a business, and it will be 75% guaranteed by SBA. So if the loan defaults, the bank loses 25% of the outstanding balance, but the SBA would come in and cover the 75.
Okay, that makes sense. So and then the 7A program, I think it can go up to like 2 million, right?
5 million.
5 million. Okay.
5 million, I believe. Yep.
And then, but you guys, I know when I started out with you guys, because I got 2 separate loans, but I got maybe 3. I think my first one was maybe 25,000. It was smaller. My next one was bigger. I think it was 125,000. But you're saying on the micro loan side, there's a little bit different. It's more you're working directly with the SBA. You're acting basically as a bank in that scenario. Yeah,
with the micro loan, you're working with the organization that is the micro lender. They can make all the credit decisions. Really, you don't have to go get an extra approval from the SBA. So it's easier, less paperwork, less. The taxpayer's not really on the hook, right? Whereas in the 7A program, it's like really the taxpayer is on the hook if you don't pay this back. SBA is going to cover it, meaning you and I.
Yeah. How many, if you had to guess, how many loans do you think from the time you started to, I know you're still involved with Bankable in a higher level, but how many loans do you think went through your program during your time, managing it? So
we had PPP in there. If we included PPP, we really close to 2,000 loans. We're almost up to 2,000 loans since inception, totaling $50 million. We're right on the cusp of that now. So now a good chunk of that was during the PPP program, but
yeah, and that was crazy. So I remember when all that stuff was going on. How fast did that first round of PPP, like, was it out? It was pretty quick, right?
Yeah, it was just
like a day.
It was there and gone. Yeah, I mean, it was so fast. I mean, maybe a little longer than a day, but it was kind of chaos. It was a lot of fun. I had a lot of fun and good memories of that because we just had to figure everything out. Like, it was a new program. We were all on even playing field with like the big banks too. And it was just like, just our team. And at the same time, like, we're all sent home. And so we're working in a new environment. What we realized, so you had to submit these PPP applications through this SBA portal. And the thing on the first day just kept crashing because every banker is on there trying to put these things in, and it just kept crashing. So what we realized is that if we worked at night when all the bankers went to bed, we could get loans submitted. So we just took shifts as a team, and we're just up submitting as many loans as we could. But we had to come up with those were 100% guaranteed, but our organization had to come up with the money to lend in the first place. So, at the same time we were trying to figure out our process, I'm also over here trying to get a bank to lend us $15 million, getting my board to approve all of that. And
it was like you were in the stock exchange. Like,
I'm like, I think they'll pay us back. The SBA is going to pay us back, I think, but yeah, well, it was kind of, we took the SBA's word for it that they were 100% guaranteed. But it was kind of a bet the farm moment.
Yeah. That was like such like a wild time because you don't know what's going to happen. And I've talked to quite a few business people. A lot of businesses, and mine in particular, I was just in the cell phone repair world. We were considered essential. So we did see like a downtick initially, but then everyone needed to get their phones and computers fixed. But what actually hurt us was the increased longevity of expenses from COVID. Like, that's really where that PPP money really helped, is like, like my payroll went up 30, 40% because I had to pay overtime. And because if someone's out, you still have to like pay them. And, so, and then the cost of everything kind of skyrocketed, and paying for cleaning and like all these other things. And that's really where that money for a lot of businesses really helped, is on the longevity of expenses. So 2,000 loans, can you pick out 1, 2, 3 characteristics of an entrepreneur, of just like, I feel really comfortable that this person is going to have a successful business? Because I feel like you have a unique, like, you got to meet a lot of people, and then also see on the back end who paid this thing back. Mm-hmm. And then I don't know, do you guys require yearly financials with like the loan and everything?
We try.
Yeah, try.
We try to get that. It's always hard. Once you put the money out there, it's hard to get people to give you information. But so, some characteristics I would say, one is when an entrepreneur can figure out a lot of things themselves. Mm-hmm. So if it's like, it's clear that this person has just learned how to do all the different things, instead of, it's always like a little scary when you're like, well, I don't really know my numbers, but I've got a person for that. Or I don't really know how to do this aspect of my business, but I've got this, even if you think in cell phone repair, like, I would imagine that it would be useful for you to actually know how to do some of the repairs at the start, right? Yeah. To be able to do, even if you're going to hire someone else to do it pretty quick, to actually, as the owner, be able to do it yourself, I think that goes a long way. So, being a problem solver, I think is one characteristic. And you can kind of figure that out based on how easy the SBA process was, because for a lot of people, it's a new process. They haven't gone through the SBA. So it's like, it can be a little intimidating or confusing, or things you haven't heard about before. So if it's like, if the person can make it through the maze of the SBA process on their own and do that right and quickly, I think that says a lot about their problem solving skills. I've also noticed one of the things that I get attracted to, I think, and maybe has been a problematic thing. Sometimes there's business owners that are growing really fast, and it's like, wow, you're really onto something here. This is really exciting. You're growing really, really fast, and I can often want to get a loan behind them to help them, and I think that a lot of times when our fastest growing clients have been the ones that have gone out of business, especially early on.
Do you think that's like a mental thing where it's like I know people do this with like income and other things. It's like, oh, things are good right now. And then they end up expecting it to continue to be that good.
Yeah.
Cause I felt that pretty early on, cause I remember, there was like a couple of months in a row we did like $60,000 in online sales. Then we did 70, then we did 80. And there was one month, I think we did almost 90,000. I'm like, oh, that's great. And then the next month eBay changed all of their algorithms and stuff. And it's like, then we went down to like 30,000.
Yeah.
And that was like a super low point, because you kind of keep expecting. Is that like that momentum? You think that's like a psychological thing?
Well, I think that when I have seen some of the worst, especially early on in the loan program, some of the worst defaults were that type of situation where it was like something changed, like regulatory, or like they were relying on a platform like an eBay, or PayPal shut them down, their pay processor, or Amazon changed something. Those are tough businesses, because like you said, you have the wind at your back. I mean, you could just be going crazy, and you could need a loan, and you could be making good money. It could make all the sense in the world to provide a loan, but you're reliant on something you don't control.
Yeah.
So yeah, I think that's something I learned that I would even take with me to my own business, is like, okay, I need to really think about how much I'm relying on some third-party platform that could turn me off.
Yeah. You don't want like all of your like eggs in one basket. Cause I remember, even this was years and years and years later, but we had an Amazon account that we were selling on, and we had one bad batch of laptops, and one customer bought 16 of them individually. I think they were drop shipping them to different customers, and then left us 16 bad reviews in the same day. And then Amazon, everything's so automated in their algorithm, where it's like, they just like turned us off, and like I appealed for years.
Yeah.
And couldn't get someone on the phone, like, sorry, like, just like, I'm like, yeah, you can see though, it's one person 16 times. Yeah. And we immediately took care of it, refunded everything. And, that big thing with eBay early on, it's like, oh my gosh, we need to like diversify, stay in the same, obviously, field, but diversify where that income's coming from.
Yeah.
So during this whole time, you have Projection Hub. I know you had some other add-ons you were working on, but it seems like Projection Hub has kind of stayed. You talked a little bit about moving to more complex Excel files. Can you talk about the decision? Because it's always hard when you have health insurance and all these other things from an entity. Can you talk a little bit about your decision to leave and do that full time, and what helped you make that decision? And then also some strategic things that you've done to grow that business.
Yeah. Yeah. So I started Projection Hub in 2012. Probably, had some opportunity where I probably could have raised some investment money and gone out and done that full time. But just never felt confident that was the right thing to do. Plus I was having fun at Bankable. So I was growing the Bankable business and getting to be an entrepreneur in that sense. And yeah, so I was getting that entrepreneurial fire there as well. But I think eventually I got to the point where it was clear that I was going to have regrets if I didn't give Projection Hub a real try. Yeah. And so I knew that meant that it wasn't fair to the Bankable and to the team there for me to be being the leader, but just being partway in it.
Yeah.
And so I got to a point where it's like, I just, even if they probably would have let me stay, and just kind of coast, and let me do part-time, but it just didn't feel right. And so I decided to step back as executive director. And that was really probably I started reducing hours maybe in the 2018, 19 timeframe.
Yeah.
And then COVID happened. And so then I kind of came back for a little while there because it was chaos and there was a lot to do and help with. So I did that for a while, but then after that, then really kind of fully stepped back about maybe 18 months ago or so. And for the last 18 months, I've really been kind of full-time Projection Hub and part-time, gig to continue helping out at Bankable.
Yeah, like still doing like more of a consultant and project based, hey, this is more complicated stuff that, a standard employee can't do. So,
right. Yep. So yeah, it's been good. I mean, it's, keeping that one foot a little bit in the door and have that like consistent income has, with Bankable has allowed me to take some risks that I otherwise wouldn't have been able to do with Projection Hub, so I'm happy that I've done that. A lot of entrepreneurs, have outside source of income, maybe a spouse works outside of the home or something. And,
sounds nice.
I'm blessed to have 4 kids at home and a wife that gets to stay home with them. Yeah. But it's nice to then also be able to have some steady income that I can rely on and then grow the business. But we've grown the business significantly through a lot of it through SEO, search engine optimization, and getting traffic that way that has been driving a lot of our growth over the last couple of years, really. And so just continuing to try to stay on top of that and ride the winds of Google as much as we can.
Yeah, I know you, because you showed me some of your videos and over the years, and you've ramped it up recently where you make a lot of content for like YouTube and the other things. Can you talk a little bit about that journey? And can you talk a little bit about how you're giving out the free content and you're using that to convert? And can you talk a little bit about those analytics? Because that's something that's becoming so much more important. One of the reasons why I'm not really this particular podcast, but I have another podcast I do that's more specific to my niche of my full-time business that I do, about putting out good educational content that's helpful, but then how you can use that to convert, leads into sales and stuff like that.
Yeah. So I'm like, I was looking back at our YouTube stats and I think, I don't consider myself a YouTuber at all. No. But then I was looking back and realizing like, we've had like, 200,000 views on our videos over the last couple of years or something like that. I was like, that's a lot. That's quite a few.
That's
views.
A lot in a niche too.
Yeah.
It's not like you're making dance videos,
Right. Yeah. With the 200,000 with the highest video probably having like 10,000 views of anything. Right. So so anyway, we make pretty basic, boring financial content, to help people create financial projections for all sorts of different types of businesses. And I dive into specifics for each type of business and show how I might model something and how I might come up with assumptions to model that, which I think can be useful just educational wise for a new business owner. And yeah, we publish those YouTube videos, and a lot of times I'm using our product to demonstrate, to teach something is what I'm trying to do, at least, using the product to demonstrate a concept. And, and then that's the easy sales pitch of, grab this template in the description of the video below. And that I haven't looked to see conversion rate wise lately, but there was a long period of time, at least, where, just a visitor that came to our site from Google might convert at 1% would convert. Mm-hmm. And a visitor that came from YouTube was converting at like 5%. So like five times the conversion rate from that YouTube content.
Well, it's probably like it's like hot lead,
Right.
I saw this guy using these spreadsheets. I want to learn more. It's like, and Google might be like, oh, that might make my job a little bit easier, but they haven't just seen how it works.
Yeah.
And I think that's like an important. So do you have like a hyperlink in the video, or is it in the description, or like, how are you doing that?
Yeah. So until you're, at least the way it was, until you hit a certain level, like number of subscribers and hours watched on YouTube, you could not put links in the video itself. You could only do it in the description. So we finally, really even just like 3 or 4 months ago, hit that level where we could put the link right in the video, which is a whole lot easier for a user to then have to go search down in the description. So, of course, as soon as we hit that, we've been trying to hit this threshold for a long time. Not 2 weeks after we hit the threshold, they lowered the bar for everybody else. So it was like we would have been there for 6 months sooner, but yeah.
Yeah. I mean, I love that. So in Projection Hub, give me like 3 common templates that, a common business that you have templates for. And then can you give me maybe like 3 or 4 that are like, oh, this is kind of more of an obscure business we've built models for?
Yeah. So probably our most popular template by sales volume is our trucking template. So, someone wants to be an owner operator, and the truck is expensive. They go get a loan for that. And so they're needing projections for that. So trucking is probably one of our most popular. Another one would be kind of very different than trucking, but we have a B2B SaaS. Yeah. So B2B software as a service template. So more in the technology space. And then we have a whole number of restaurant related templates, but we have various different restaurants. So I would say that category of restaurant templates is probably the third most popular.
When you say restaurants, are those like franchises, more like brands, or is it like, I want to start my own sandwich shop?
Fine dining restaurant, or fast casual or bar. Yeah. Concept. Yeah. Brewery. We sell a lot of brewery templates. So a few that are more maybe unique, I would say. One is we have built an acquisition template that I think is pretty useful. So if you're looking to, it's kind of industry agnostic. Yeah. So if you're looking to acquire a business, there's a bunch of details around modeling the financing of how you're going to acquire that. And would you do like a seller's note where the seller of the business is kind of providing some of that financing and being paid out over time, really. So you can model that with this template. It allows you to input their historical financial information. If you're acquiring an existing business, you have historicals to go off of. So you can put in the historicals and then apply some assumptions to it and create that. So that I think has been pretty useful for a lot of people. And then one of the more recent kind of sets of models that we've been getting into that is pretty, is a whole nother world that we're learning, but real estate development, real estate acquisition. So we've got multifamily apartment complex developer templates that I think pretty sophisticated.
How do you decide? I mean, I'm assuming you get if you get enough requests for something, or if someone hires you to do a consulting, like, hey, I want to do this, the template doesn't exist. Hey, we'll build it for you for this amount. And then is that how you decide what to build essentially?
That is certainly part of it. If a customer's asked for it, it's like, oh no, we have a template. That's how it started really. It was like, we were getting custom requests. I'd say at this point we have a template for most requests that are pretty good. So now it's more about, I'm doing keyword research, using some different Google keyword planner tool to get an idea of search volume. So I can see, okay, wow, there's for our little niche, it might be a big deal to say there's 100 people a month looking for a multi-family apartment developer financial model. That's pretty specific. So if we built that, I bet we'd have a pretty high conversion rate out of those 100. So that's kind of the game plan now, is we're just kind of go through this niche. We're in like niches on niches, right?
Yeah. I love that. I love that you have like this unique look into just like a plethora of different businesses. I feel like that's pretty rare for someone to have to kind of see underneath the curtain, like behind the curtain on a lot of these different things. So going more to a personal side, obviously 4 kids at home, you're still doing consulting, and then you're doing this. What do you do? Do you have any like personal disciplines or some, not rituals, but some things that you do for your mental health and then physical health that you do on a consistent basis? Like, what do you do to fill your tank?
Yeah. I would say exercise has been the one thing that I can say I've consistently kept up with. I'm married to a health coach. That helps. It's not something that that she is at this point in my life. It's not like she's pushing me. I enjoy it, and it almost feels necessary as a way to refill. So I'd say that is been important. I think the other thing, this is not really a ritual, but something that I have, that I think maybe is a unique insight into at least the way that we have decided to kind of operate our life, is like, we try to keep things simple. So like, trying not to add unnecessary complexity to my life. So our life is pretty simple. I think that just has a lot of benefits.
You guys keep like a very organized calendar, and, just like, it's, you don't do a lot of things at like last minute.
We're organized. We have kind of set aside time that we know we're going to have, like our free time together, free time apart from the family, but also just things like the way I've kind of optimized my life and the way that the businesses work and my consulting role and whatnot. Like, it allows me to bring the kids to school. It allows me to like take the baby monitor while my wife goes to pick up the kids, which is really a nice little perk. Like I can just make sure, okay, I'm not going to schedule meetings from 2 to 3 during the afternoon, because I know that's pickup time. I can get other stuff done during that time. And like, so I'm optimizing to try to make our lives simple or easy.
I had dinner with a friend last night, and I was just telling him, we do foster care, and talking about mourning my freedom a little bit. And he's like, well, you're about to get into another set of life, which he goes is kids sports. And I was like, oh my gosh, he was telling me about their schedule. And he's like, I run around, and I go drop one off, and then I have a half hour. So I have to sit there. And he's like, I read a lot of books and stuff. And, I think you're right. Keeping life simple and making those decisions and being on the same page too with your spouse is so important. So I appreciate that. But well, I appreciate you being on, and I think this is like crazy insightful. I respect you so highly just on how you take kind of bigger things and you cut it up, and you're just like, hey, this is good business principles. And I think for a lot of entrepreneurs out there, that's like a really good discipline to, because sometimes you want to tackle the world all at once. And it's good to be like, hey, like these small things, doing them every day or every week is going to get you where you need to be. So thanks for being a good friend and, a good role model in that area. So appreciate it.
Thank you for having me on.
Yeah.
This is fun.
Thanks, Adam.